Good morning, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I am the Director of Client Training and Education for TradeStation Securities, and it's always a pleasure to be here with all of you. This is our Strategy Elements series, and the title of today's presentation is Scale In and Scale Out of Positions Using a Strategy. Before we get started, let's do the usual disclosures. Just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and past historical performance is no guarantee of future results. Today, we're going to be looking at the strategy performance report, and we all need to be aware that when we look at performance applied to historical market data, that, of course, does not guarantee the results going forward. The link to access additional details on these disclosures is www.tradestation.com/important-information. So welcome, everyone. Let's use this opportunity to answer any questions you may have about the TradeStation technology. Today, we're going to focus on the strategy testing technology that's part of the TradeStation platform. It's a feature that I enjoy a lot because of its functionality and how it allows you to test trading ideas and have an understanding of how the strategy mechanics work and determine if a trading strategy is something that you want to trade going forward. So let's go ahead and switch over to my TradeStation platform and start our strategy discussion. Let me go to apps and open up my chart analysis. By the way, there's no download of a PDF today. We are going to just concentrate on the TradeStation platform. Later in the presentation, I am going to use a custom strategy, which I'm going to share with everyone here. It's a custom strategy that also scales out of positions, and it shows you an example on how you can set that up on your own personal easy language if you are creating strategies of your own. But here I have a chart of Disney. Let me go ahead and set it to 30-minute. And first of all, let's talk a little bit about scaling in, because there is a feature here on TradeStation that allows you to scale in as the criteria you're looking for is true. So let's go ahead and use a strategy here, one of the canned strategies of TradeStation, so that we can demonstrate this functionality. Studies, add strategy, and to get this example started, we're going to use a simple strategy called Key Reversal LE. LE is long entry. I guess if you've been to many of my strategy elements classes, we talk about this many times. LE, the long entry, and the LX is the long exit. The SE is a short entry, and the SX is a short exit. For now, we're just going to add the Key Reversal LE because I want to talk about how the strategy behaves and what it does as soon as you put it on the chart. Let's go ahead and take a look. I'm not going to change any parameters of the strategy. I'm just going to use it the way that it's designed and programmed. So let's go ahead and click OK. And what you see here is what usually happens when you add a strategy to TradeStation. It appears that nothing happened. However, if I go back in history on this chart of Disney, you're going to see that the strategy does indeed provide me with an entry. Everybody sees the Key Reversal LE label right here on this bar. That's where the strategy determined that a long entry needed to be entered based on the Key Reversal criteria. Now, the Key Reversal criteria is a simple two-bar pattern. Let's go ahead and zoom in on this candle where the strategy generated the entry so that we can understand what's going on. Okay, so this is where the entry was generated. The key reversal must have been met on the prior two bars. And the condition is very simple. You have to get a low or low price of the candle that is lower than the previous bar's low. So that we meet. And also there's a two-part of this bar formation. Not only we're looking for two continuous lows, but we're also looking for the closing price, in this case up here, to be higher than the previous bar's close. So this two-bar pattern is what constitutes a key reversal on this particular strategy. I know there's many definitions of what a key reversal is, and there may be variations as to how many bars are needed for the confirmation, and there are different conditions. But this is just a simple two-bar pattern. We look at consecutive lower lows, and then a closing price that is higher than the previous bar. Once you meet that condition, then the strategy is set to generate a long entry. The reason why we don't have any additional activity here is not because the strategy wasn't met, it's just because the strategy is designed to only take one trade in one direction at a time, meaning that once it met the criteria for the key reversal, it did what it was supposed to do, which is generate a signal, and then it waits for something different to happen. It will not repeat the entry by default. We can turn on what's called pyramiding so that TradeStation continues to add on to your strategy position as the criteria continues to be met. But from the get-go, as soon as you add the strategy, it'll only add one signal and wait for something else. I can add some exits to this strategy, like a profit target and a stop loss, so that my key reversal can interact with them. In fact, let's go ahead and do that. Let me go here to studies. I'm going to click on add study. Sorry, wrong dialog. I didn't mean to click on add studies. I meant to click on add strategy. That's where we find the profit target and the stop loss. Just a simple profit target. Okay, and then just a simple stop loss. Here we go. I'm going to select them both at the same time. I may want to prompt for editing because I want to tweak the settings of those two strategies. Okay, if I look at the profit target, it's looking at a 5-point movement. Now for Disney, which is the symbol that I have here in the background, that may be a little high for a 30-minute bar. And if I'm looking at a 30-minute bar activity, I see, 1 or 2 point movements. I'm going to modify that target to only be 2. So I'm looking for a 2-point movement on Disney. And for the stop, I'm just going to leave it at 1. So 1-point movement for the stop. Let me go ahead and click on close. And when I do that, the strategy then has something to interact with. Now you can see more signals because now that original entry that we had has a way to exit and then generate that entry one more time. Here's the original entry that the strategy generated. And you can see that it stopped me right here because the market went down on this long trade. And the same happens right here. If we enter long on this other key reversal, notice how the profit target was met right here. So it is interacting with the profit target and the stop loss that I entered. I'm not going to measure, the performance of the strategy yet because I'm just explaining how the strategy behaves and how it generates the signals. Because as strategy testers, we need to understand what's happening in the background and why is it that a strategy behaves a certain way. Let's go ahead and turn on that feature that allows me to enter multiple times and add on to my original position size. As you can tell, the strategy is trading 100 shares by default. The reason for that is because that's the default number. If you don't set up the trade size, it'll always trade 100 shares if you're testing on equities, and it'll test one contract if you're back testing on futures. But let's go ahead and go to studies and click on edit strategies. In the edit strategies dialog, I'm going to point to this button here that says properties for all, because we're going to find a lot of features there that affect the way that the strategy behaves. By the way, I have 3 different strategy components added here. They're all working together, meaning that they're all active. And even though they're independent, they're all monitoring the market so that as soon as the criteria is met, you'll have signals on the chart. But I'm going to go here to properties for all. Because right here in the general settings, notice that you have 3 different tabs. You have a box for position limits, and it says in parentheses that it is for pyramiding strategies only. Basically, most of the strategies in TradeStation have the ability to become a pyramiding strategy by just turning this on. By default, the key reversal we just added, it's designed to just trade once and then wait for other strategies to trigger, like the profit target and the stop loss. But you can come here and turn this checkbox on, and it says allow up to 50 entry orders in the same direction as the currently held position. Of course, you have the ability to limit the number of times that the strategy is going to enter. If we're trading 100 shares at a time and you leave this at 50, there is a potential that the strategy could have a position size of 5,000 shares if we enter, 50 times. So something to keep in mind, especially, if you have limited capital and you want to make sure that the strategy is able to trade with your capital. On a stock like Disney, 1,000 shares would be close to $100,000. So something to keep in mind. Okay, so I'm going to turn it on. Let me reduce this 50 to 3. So the maximum size that I'm going to get is 300 if it trades 100 shares every single time. There's two settings below that, and we're going to use them both so that you can see the difference. The first one is when the order is generated by a different entry order, and the other is regardless of the entry that generated the order. It's important that we analyze these two buttons because it's going to affect the way that the strategy behaves. The first one that says when the order is generated by a different entry order, if I move this box over here to the right-hand side, and I look at the strategies that I have here on this chart, how many entry strategies do I have? I only have one, which is the key reversal long entry. The other two strategy components that I added, the profit target and the stop loss, are exit strategies. So if I look over here at this radio button, it says when the order is generated by a different entry order, this is not going to make the key reversal long entry trade again because it's looking for a different entry order. I'm going to show how that behaves with a different strategy in a little moment, but let's go ahead and test the second radio button or bullet, as you want to call it, that says regardless of the entry that generated the order. So if the key reversal long entry is the one that generates the entry one more time, it'll allow it and it'll increase your position size. A way of scaling in and increase your position size, something that traders call pyramiding as well. Let me go ahead and click OK to this, and then I'm going to click OK. And here we go. Now, at certain times of the original entry, we get exits. I know it's a little, there's a lot of lines going on here, but let me concentrate on this area right here. Here we go. So this is our original key reversal long entry. Take a look at what happened a few candlesticks after. We got another key reversal long entry, and notice the number of shares. Now we're up to 200. And then here we have the key reversal triggered again. And now it increases our position size to 300. Interesting, huh? Now it doesn't add anymore because we set a limit to the number of times that the key reversal was going to enter. What happens here, though, is we have 3 different stop losses, one for each one of the entries, because the way that we specified the stop loss was a 1-point movement, and it's going to calculate that 1-point movement for each one of our entries. So for example, let's go ahead and take a look at the entry of our first signal. I'm going to click here outside of the candle, hold my mouse button, I get the data tips window, and this tells me some information about the strategy. If you look at the bottom, it says the strategy bought 100 shares at 92.49. 92.49. So if my stop is 1 point, I'm going to expect my exit to be at 91.49. So if I check the exit of that particular signal is right here on this candle, let's go ahead and click. There's 2 exits that happen here, one at 91.49 and the other at 91.25. The one at 91.49 is the one that matches the entry here, the 92.49, exactly 1 point. Now, this second entry that happened at 91.84 was not exited until right here. It was the third entry that was exited on the same bar of our first entry. So when you do the stop loss calculation on a per share basis, TradeStation is going to calculate the stop loss and the profit target individually for each one of your entries. So it's going to look like they're exiting at different times, and it's going to be a little bit confusing to try to match, the entry with your exit. But just understand the behavior here, that when you use a per share basis to calculate the profit target or the stop loss, it's going to show the exits independently. Now, if I do something here on my strategy, let me go to the settings here of the strategy, and I'm going to modify my profit target. And I'm going to say that I want my profit target to be $500 instead. Instead of doing the calculation on a per share basis, saying like, I only want 2 points per share, I'm going to say $500 in total. For that, I need to change the position basis. Notice how the position basis is false right now. I need to change that to true. I want to change that to true because I do want to base my calculation on my position. That's what position basis means. So if you set it to true, we're going to calculate my profit target on the position as a whole. That's why it's expecting a dollar value instead of, a point movement. Hopefully that's clear. So let me go ahead and click OK here. And I'm going to do the same thing here for the stop loss. I'm going to double click. I'm going to turn the position basis to true. And then I'm going to set the amount here to 200. I'm changing the amounts a little bit, but it doesn't really matter. We're just talking about the functionality here. I'm going to click OK to this and then click on close. And I want you to take a look at how that affected my strategy. Now, since I'm calculating my profit target and my stop loss on the position as a whole, now the strategy sees that I have 300 shares of Disney and they're all exited at the same time because it's calculating that stop loss on the whole position. And you can see that all the exits are aligned right here. So there's a difference between calculating stop losses and profit targets per share, compared to what happens when you calculate the profit and loss with the position as a whole in mind. All right, let's go ahead and take a look at the other functionality. Let me go ahead and go here. Let me go to properties for all, because we're talking about pyramiding and scaling. Let's go ahead and set this to when the order is generated by a different entry order. Let's go ahead and click OK and OK. Notice that when I do that, the key reversal does not add on to its original position size because it's looking for a different entry signal. So what I'm going to do is I'm going to add a couple of entry signals so you can see how they're generated with the key reversal. I'm going to go to studies, add study, and let's go ahead and take a look at the list of strategies. I'm going to add, this is studies. I didn't mean to click on studies. I did that twice. Studies, add strategy. I'm going to add, let's do a MACD long entry. And I'll also use a momentum long entry. So 2 entry strategies in addition to the key reversal. I don't want to edit the strategies. So I'm going to uncheck this. I just want to use them the way they come out of the box. I'm going to click OK. And here we go. Let me scroll back to that original entry and see what happens. Let me go ahead and zoom in. So this is the original entry. Notice that it's still the key reversal. But notice what happens here. On this bar, we have a MACD long entry, and it increased our position size to 200. So when you set it to a different entry signal, that's exactly what it's going to do. It's going to wait for a different entry strategy to generate a signal that increases your position size. In this case, we initiated the trade with a key reversal. The MACD added to our position size to 200, and then our stop loss was kicked in because it calculates that value on the position as a whole. Now, adding the MACD and momentum and key reversal all together does not mean that they're all working as a condition of each other. You may think that by adding all the 3 strategies to my chart, that the signals will only be generated when all 3 are aligned, but that's not the case. Even though we do have all the entry signals in my chart, they're still independent and they're all, calculating at the same time. And whichever one meets the criteria, that's the one that is going to generate the signal. Just keep that in mind, because if you do want the key reversal and the MACD and the momentum to all be aligned in order to generate the signal, that requires a little bit more programming. That requires you to write the strategy using easy language so that you can create those conditions. But adding the strategy components to the strategy does not connect them. They do work independent, but they're all turned on, simultaneously. Hopefully that makes sense. Let me go over here to my strategy settings. Notice that what I'm doing, I'm using a shortcut of double clicking on one of the signals. I do that many times because I like double clicking as a shortcut, but you can go to studies and edit strategies. That's the same thing. I just double click on the little arrow. It doesn't matter which one you double click on, it'll take you to the same dialog and you can see all the strategies that are working here. Let me go ahead and remove the MACD. I just wanted to add them to show you how different entry signals, behave with my original entry. But the way that you turn on pyramiding is by going to properties for all and allowing your position limits. There's also a box here that limits the number of shares or contracts or units per position, which also limits, the number of times it enters. So they both work together. Whichever one is hit first, that's the limitation. So if I do this, let me just take a look at a trade where I have 300. All right, let me go ahead and go back in there because I didn't turn on the feature that allows it to enter regardless of the strategy. So let's go here and turn this on. So you can see that on this first trade, there's 3 entries. But if I come over here and I go to the settings again, and I set a limit of 200 right here. So I'm allowing it to enter 3 times, but only have 200 shares. That's my ceiling. If I click OK to that, then you can see that it removes one of the entries because I'm limiting the number of shares I want to hold per position. So that's 2 different things that you can set on that dialog. Let me go to properties for all. I think the setting here was 65,000. Excessive, but it depends on, the shares that you're trading and the value of each one of the shares. Let me click OK and OK. And there we go. One of the things that it doesn't do out of the box is scaling out. We saw 2 modes of the strategy. The first one, the strategy exited my entries separately. That's the one we did where we specified the profit target and the stop loss using tick movement. And the other one is exiting all the signals at the same time because we have the profit target and the stop loss defined as a total value for the position. But what it's not doing is exiting or scaling out. Well, the other one, the first one we did is kind of scaling out because they're being exited separately. But there's a more elegant way of making your strategy exit your position size. Let's go ahead and take a look at a custom strategy. The strategy that I'm sending everyone here is a custom strategy that serves as an example of scaling out. That is going to download a zip folder, and inside the zip folder, there's going to be an ELD file. An ELD file is an easy language document, and you can import it into TradeStation. Once you save it to your computer, just go to the file menu right here at TradeStation, and you can go to the import wizard to bring in that strategy into your own TradeStation platform. If anybody has any questions on that process, let me know, and we can go over the steps, towards the end of the class. I'm going to open up a new workspace here because I want to start off with a brand new chart. Okay, I'm still going to set this to 30 minutes. All right, and I'm going to load 6 months of data. I type 6 months, and that gives me 6 months of data for Disney on a 30-minute time frame. I'm going to go to Studies, Add Strategy, and I'm going to go here to that custom strategy. The name of the custom strategy starts with an @ symbol. So @MC, MC for masterclass, and it's called scaling out. So make sure that you go towards the top of the strategy components. The name starts with an @ symbol, MC scaling out. So let me go ahead and put that strategy right here on my chart, and let's talk about the strategy signals and what its intended use is. Let's go ahead and take a look at this strategy. And in order to look at the conditions, let me go and take a look at the easy language code so we can walk through the steps of the strategy as to what it's doing to enter and exit the market. Let me go ahead. Well, not here. What I wanted to do is right click on that arrow. You see, when you right-click on an indicator or you right-click on the signal of a strategy, it gives you the option to edit easy language for that strategy or that study. It's a convenient shortcut so that instead of having to go to the development environment and searching for that strategy to open it, I can just right-click on it and then access the easy language. Easy language is what controls the calculations of all these strategies and indicators. So if you want to have an understanding of what the strategy is doing and what criteria it's looking at, it's important for you to go in there and take a look. I'm going to go to easy language. Okay, and this is the code. And if you look at the very top, we have a few inputs. We have a trade size, which is defaulted to 300. We have a first target, which is set to 300, a second target at 600, a third target at 900, a minimum profit of 300, a break-even point of 0.1, and a stop loss of 200. So we have all those components into the strategy, and it's going to use those inputs in order to enter and exit at different stages of your chart. So let's go ahead and take a look at what it says here. If the time equals the session first bar time, then begin. What that statement does is look for the very first bar of the day. That's why it's called session first bar time. If it finds the first bar of the day, that's when it starts calculating. What does it do? It's going to buy the next bar, trade size. Notice how it uses the word here, trade size, meaning that it's 300. It's going to buy next bar, 300 shares at the high stop. So it's going to generate a buy stop at the high of the bar. Interesting. So it's using the range of that very first bar in order to set your entry. It's going to say a buy at the high, and it's going to do a sell short at the low. These are two stop orders, one to buy and the other to sell short on that very first bar's range. Once it does that, once it establishes my position of 300, then it's going to manage that position and scale out. Scale out based on open position profit. As it meets my targets, remember that we have three. The first target, 300, then 600, and then 900. As it meets those three targets, it'll sell, it'll exit those shares at market. Now we do that on the long side and we do that on the short side. So market position equals 1 is when you are in a long trade. Market position equals -1 is when you are in a short trade. In addition to scaling out based on my open position profit and the targets that I've specified, I also have a selling condition here that if my current contracts is less than the trade size, then I do a break-even stop. Now, we're going to take a look at this in a little moment and how it behaves. When you first read the strategies, you know, this condition is a little difficult to grasp, but I'm going to explain it using the signals on the strategies so that it makes sense. And then once we have that break-even calculation, we have a regular stop loss, and then we have a regular exit on close. So if none of the conditions here are met, we also have a way of protecting ourselves with a stop loss or exiting at the end of the day. So let's go ahead and take a look at what happens on my chart. On the chart, I want to take a look at an example where the strategy entered and exited multiple times. But to do that, let me go ahead and change the trade size here. I'm trading Disney and it's trading 300 shares, but I'm going to increase that to 900. I'm using multiples of 3 because I have 3 different targets and I want the strategy to be able to exit a third of my position without creating some odd numbers. So let me go back here to the code. You can notice that the trade size here is being multiplied by a 0.333. So 1/3 of your strategy or your position size. So it's important that if we're going to use this strategy, that we make sure that the trade size can be divided by 3. in even lots. You can of course change this. If you want to have two targets and make this a 0.5 and remove one of those exits, it's up to you. It's just that this one particular one was created using 1/3 of the position size, but you can do any combination you'd like. Let me go back here to my code, to my strategy, I'm sorry. So I'm increasing the trade size to 900. And let's take a look. So I have some break-even strategies being hit here. And I want to take a look at, okay, let's take a look at this day in particular. This is the first bar of the day. How do I know? Because it has the session break right on it. This is the first bar of the day. On the first bar of the day, remember that the strategy is looking for a buy order on the high of this bar and a sell short order on the low of this bar. So which one of the prices was hit? The low. And notice that in this particular day, the strategy generated a short trade right at the low of that first bar. So it entered 900 shares. It says negative 900 because we are in a short trade. The price continued to go down. Notice that we have our first target here. It says SX1. And the position size now is negative 600. So at this point, it was able to exit 300 shares of my original trade size. Then we have the second target right here. And our position size now is negative 300. It didn't reach the third target. So this example did not reach the third target. What it did reach was the end of day exit. So at the end of the day, it still had those 300 shares and I was able to exit it with my, exit on close reserved words. It's important that if you want to ensure that you don't keep any positions open overnight for whatever reason, maybe margin or you just don't like to leave any positions open overnight, you can use that strategy to generate an end of day exit. Let's go ahead and take a look at another example here. Okay, so let's go ahead and take a look at this one. Let me go ahead and zoom in. This right here. So again, this is the first bar of the day. It generates a sell short right here at the bottom and a buy right here at the top. Which one was hit? The short side was hit. So we have a short signal here for 900 shares. This hit the first target, SX1. So now we have the position size at negative 600. But take a look at what happens here. Set break even. It actually generated that exit to break even. Why did it do that? Well, if we go back to the code, that's why I wanted to look at an example and show you, how the break even gets triggered. The break even only gets activated if your current contracts, meaning the number of shares or contracts you're holding, the fact that it says contracts doesn't really matter. Contracts, can be interchangeable for stocks, shares, or for futures. But current contracts is going to look at the number of shares that you're holding. If that's less than the trade size, and the trade size being, in this case, well, the default input is 300. But if you guys remember, I changed mine to 900. So I'm looking for a position size that is less than 900. When did that happen? That happened when it hit the first target. Once it hits the first target, that's the first time that my position size is less than 900. You see? And that's when the break-even order or the break-even signal is activated. And it actually hit it because the price started to go up instead of continuing to go down. It had the price, continued to go down, it would have probably hit my second target and my third target. But since it went up, it actually entered a break even. Now, where is the break even entered? Notice that the break even is entered at the entry price. That's the original entry price. And then it adds the break even points. The only reason why we add this is just for variability. So this is optional. So what it's doing, actually, it's on the short side. And on the short side, what it's doing is taking the break even points that we set them at a 0.10. So that we can exit at the entry price minus that amount. The reason why this strategy was written that way is just to account for any cost that the strategy is generating. If it's commissions, if it's slippage, you want to make sure that you account for that. So on a long trade, we're exiting a little bit higher than our entry price just to make sure that we cover the cost. And on a short entry or a short trade, we are subtracting it so to make sure that we also cover the cost of the trade. That's the only reason why we have this break-even points. They're not necessary, but it's adding that 10 cents to our entry. Let's go ahead and take a look at what happened here. Our entry for this strategy signal was 92.72. So if we're subtracting 10 cents from that, my break-even should have exited at 92.62. Let's go ahead and check. And you can see how it covered at 92.62. So the break-even actually triggered exactly at the price that it should have. Interesting, right? Now, let's go ahead and take a look at another one, another signal. Let me go ahead and zoom out. Because sometimes, let me go here to this trade. Sometimes, it just hits the stop loss. Here, you can see that, again, we have the first bar, generates a buy and a sell short right here. The next bar hit the short order. So we are in a short trade. But as soon as it went in as a short trade, it actually, or the prices went up and it actually hit our stop loss right here. So let's go ahead and take a look at the strategy performance report of this strategy. Data, strategy performance report. Okay, we can see the report right here. Again, looking at the report doesn't mean that the strategy is going to continue doing the same going forward. At a glance, we can see how the strategy is doing pretty well, but that's only because we loaded the first or the most recent 6 months of the data. If I were to add more data or maybe trade this strategy going forward, I know for a fact that I'm not going to get the same results. In fact, let me go back here and show you that. Let me load 1 year more of data. This is going to recalculate once it finishes downloading the data. And you can see that it drastically changed my performance. Let me go here to my performance graphs. So you can see that originally we were looking at this angle of equity. So the equity was pointing upward, and it is right now, but it also added, an extra 6 months of data where the strategy did not do well at all. It actually went to the negative side over here down to, a little bit over than $8,000. So now it's in the positive, but barely. It had to recover all that loss that it generated, in the first 6 months of the year. So limiting the amount of data, of course, I'm just looking at this uptrend on the equity, and it looks really nice. But if you apply to different historical periods, you can see how the strategy is not yet, ready to be traded, and it needs more work. But I wanted to show you this so that you can see that the performance summary is available on this strategy as well. Let's see, what else do I want to show you here? I think that's it. I want you guys to take a look at the strategy, use it as a way for you to design a scale out strategy. We do have the ability, or we do have the functionality to allow the strategies to scale in, but we don't have the ability to scale out. So this would be the way that you would have to set it up in your easy language code for the strategy to exit at different conditions. Here we have several conditions to exit. We have 3 targets, we have 1 break even, we have 1 stop loss, and we have a set exit on close. There's 6 different ways that the strategy can exit, and the example is right there for everyone to use, okay? I don't see any questions here in the chat, so I'm going to assume that there's no questions. If you have any questions, please send me an email. I think Manolo shared the email address right here. You can do that again, Manolo. It's education@tradestation.com. Any issues with the zip folder or any questions about the strategy, send them over to me and I'll be glad to answer. Check the event schedule. Share the events link again, Manolo, please. The events are in the calendar, so you can check to see what topics are upcoming. And if anything catches your interest, I'm looking forward to seeing you there, okay? Have a wonderful afternoon and great having you. Bye-bye.